Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Tuesday, the 12th of January, 2020. So, what are we going to see tomorrow? We're going to be locked up in impeachment talk the whole day. It's already begun. You're now seeing Mitch McConnell said he's fed up with President Trump. Doesn't like the actions. You know, he's got to go his own way. He's no longer going to be the majority leader in the Senate. That's very important. Did the president cost those 2 seats in Georgia? Nobody's saying yes or no, but I think underneath it all, the actions might have caused that. They might have rallied the Democrats out for it. Who the heck knows? Nobody knows. But we're going to go through more of this. It was interesting today because I saw a Harvard law professor, and I'm not sure if I was watching CNBC or Bloomberg at the time of the interview, and he was saying, well, you know, if the president resigns on the 19th, he can just walk himself right into when the Senate basically reconvenes, takes them out of harm's way, resigns for a day, Vice President Pence steps in, and if that occurs, the way that he was talking, and I'm no law expert, sounds as though that because of the resignation at that point, he could run for office again and they couldn't impeach him. I don't know, but with this president, anything is possible. So where are we? Well, let's take a look at the charts. First off, we know the biotech has been an interesting story, but if you look at it, the market is just caught in a trading range. You made some tops back here late in December. You fell back. You've come back up to probe those areas right now. The trend is up. You do have a pattern of higher lows, and you certainly have the higher highs, so trend up. The bias of the market is also up because the market is staying over the 18-day average. And if you'll notice on the pullback yesterday, you held that number and today you sprung a bit higher. Now, what would turn this chart into a bearish chart would be just taking out, in my opinion at least, 145.75. If that occurred, you'd have a pattern of lower highs and lower lows, and you'd be under 146.40, the 18-day average of closes. Another way of me saying it is I think that's the number, the 18-day average, the pros have to defend and not let it get under the 145.75. Where's the upside target if the market moves higher? 153.60 right now, the Bollinger Band. That'll probably be a bit higher tomorrow. The way that the pattern's going and because of how the math is done in this, I'm guessing it's going to be up a little bit from here. Momentum-wise, you have a market that's pointing higher, but it's now in overbought territory. I don't think you'll attract a lot of new buying because of that. Now, there could be an event that comes out in the morning and causes the buying, but barring that, if you're just asking me chart forces, no. So I think the bulls have control in an overbought market that seems to be now stuck in staying a bit under the 18-day average, a bit over, and really not going anywhere one way or the other. On this breakdown, it was unable to get to the lower band, and on the recent rally to the upper band. So pay attention to those events. When we look at the semiconductors, this is what we call that gorilla glue trade. What do I mean by that? It's when a market gets to the Bollinger Band and just continues to hug it. It refuses to get away from it. It often causes the slow stochastic to eventually embed, which is another bullish configuration. But I prefer to see the embedded reading happen first and then the other way around. Because what can happen is you exhaust price and then momentum just collapses on you later. Just something to think of. Where did all this action come from? You do see what we call a pipe. That's when a market narrows in. So you'd been in an uptrend, you went sideways, the band started converging, fighting at that, and then they began the process of moving up and over that number. And they wouldn't give it up. So you've got to learn to pay attention to these type of events. Still a bullish configuration, but I wish it had had the embedded reading. It's overbought. That's all I can say. Uptrend that is overbought, and I don't even know where to give you a target number. The industrial sector, you're trying to push on the upper Bollinger Band to lift it away from, again, that sideways action that we had. And this sideways action was in place from early November, and it's just begun in the past week, the move to the upside. Why? Probably because the Democrats have the House, the Senate, and the presidency. People think there's going to be stimulus spending, other types of spending. Well, industrial sector, duh. So up and away you're going. The resistance is right here. Trend is up, but overbought. Energy sector, you've been in this uptrend. The Saudis grabbed control by, again, cutting those barrels. You did not have a friendly, in my opinion at least, API report tonight. You have a net build, if anything. We'll see just how they come out in the morning. What's interesting is the traders aren't looking at the build in the distillates and the gasoline. They seem to be focused, again, just on the energy stocks. That's not the right way to do it. You've got to look at a net number to see what's moving in and out of the channel. The demand for, if you keep taking down the draw on the crude, but you're building big supplies of the other ends of the product, that's not bullish. You need them all to be going in unison. But you can see how the market's trying to break out to the upside, overbought. And we have a lot of this. We have a lot of markets that have moved out now back into the upper Bollinger Bands, but are overbought. I'll let somebody else carry that risk. I have no intent of telling my viewers, my subscribers, to make trades like that. I do see the trend is up, so I'm not saying be short. There's a very big difference there. Maybe you don't participate. You're stuck in the sideways action in QQQ. Momentum pointing down, no trend, bias up. I don't know what to do with that. Emerging markets, as I told you, this has got to be one of the most crowded trades there are. Everybody that's on TV keeps saying, I like emerging markets. I saw it again today all day. If you lose the embedded reading with the red line getting back under 80, you're probably going to get back to that 18-day average. The pattern here is questionable. You have a higher high and lower low, but this rules the day. Until you lose that embedded reading, I say the pros are buying this market, and if you lose the reading, that's when they'll come out of it. Until then, you're still targeting 75.84 as I see it. Gold. Remember what I talk about, that long-term average, the 200-day. A lot of traders think this is a very important number. They like to come in at what they call a value number. People all over television are talking $2,000 plus for gold this year, 2021. We've had a correction, so that makes it attractive to some. I'm not one of those people. I can see why the support's coming in there, and I understand it. And I understand you're oversold, and that's a logical spot for maybe shorts to cover. But just because you hit a long-term average isn't enough reason for me. But that's me. I'm not everybody. In the gold miners, you're still in a downtrend. Lower highs, lower lows. Now, you tried a lower area today, and you finally found the bounce, but there's formidable resistance between 36.65, the 18-day average, and 36.90, the 200-day average. So you have that. Above the market, plenty of layers of resistance as well. It's the oversold area or knocking on the door of it that's concerned. But at 36.65 to 90, I don't think the bears are going to be concerned because you won't be in that 32 area, 33. So I think you can give them some fodder. I expected that we were going to get a bounce in TLT. I had you count with me yesterday how many days under the lower Bollinger Band, and you move to the right-hand side. You don't have to be up to move to the right-hand side. And the other thing I tell you, when you come down like that, that is not a sign of overextended. That's a sign of what? Power to the downside. Is the market ready to bounce here? At any point. It's oversold, extended. That doesn't mean you're going to change what the market's done in the down thrust. I wish I could tell you it's in a downtrend because I think we'd all agree looking at the chart, that's it, but not on the swing line basis. The swing line still has a higher high, lower low. I walk away from trades like that. FXE, I was expecting a challenge of the lower Bollinger Band. You got it yesterday, you held today, and now you're getting a bounce. You're still in a market that is knocking on the door of oversold, but not there, but getting its bounce. Now, the dollar got hit today very hard, and this market gave you the good bounce out of it. You know, if you're a SPDR ETF trader, I changed the times that I put these out. I now do them first thing in the morning. I let the market open at 8:30. At 8:40, I start recording. So that's Chicago time, Central time. That gives you the trades as I'm seeing them, as I'm doing these recordings within just a matter of minutes, basically. It's not an hour between when I'm recording and posting. That I can tell you. If I'm trying to get it down much shorter than even the time that it's taking now. I cover all these markets and more. I keep adding to this. Specific, I want you to buy here. I want you to sell there. This is what I think you do. Here's what the weekly chart looks like. Here's what the daily chart looks like. Match them together. See if this makes sense to you. That's the way you're going to hear me talk in those videos. My beautiful face isn't in them. Rather, it's just my computer screen. 8:40 in the morning, I start the recording of it. It's posted typically about 9:15, 9:30, right in that time zone. To find out more, just go to our website under the word research. It's all explained. You can sign up for it there as well. You can see the prices near nothing. I mean, a tick in markets is more than the $8.95, and you get 26 videos a month. That is quite a few videos. That's 6 a week. And today's, for example, was 27 minutes long. So I really go into the charts, and I break it down so that you can easily go to a section you want. I name the different sections for you. You can drag on the website the poll, and it tells in very big letters, you know exactly where you're at. And I do them always in the same sequence, so you get very used to it. I'm Ira. You have a good day. Hope you sign up for this, and I'll see you tomorrow.